Like the idea of living off of passive income? How about living off of passive income that grows all by itself? Want to know about stocks that are rewarding their shareholders with even bigger dividends? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. I'm a huge fan of dividend growth investing. Of course, it's easy to be a fan. What is there to not love about it? Dividend growth investing is all about investing in world-class enterprises. These world-class enterprises are producing ever more profit by providing the world with the products and/or services it demands. It's all about selling more stuff to more people at higher prices. And they pass along much of that ever higher profit back to their shareholders in the form of ever more dividends. Living off of dividends is great, but living off of growing dividends is so much better. Since inflation is omnipresent and causing the costs of pretty much everything in life to rise over time, you need a passive income source that can keep up with that if you want financial freedom that is sustainable over the long run. High quality dividend growth stocks have got you covered. Today, I want to tell you about 3 dividend growth stocks that just increased their dividends. Ready? Let's dig in. The first dividend increase you should know about came from American States Water Co., stock ticker AWR. American States Water just increased their dividend by 9%. This is a great example of why high-quality dividend growth stocks are such fantastic long-term investments and why they're great at fighting off inflation. The cost of goods and services are rising, but that also means higher revenue, profits, and dividends. This marks the 68th consecutive year of dividend increases for the water utility business. 68 consecutive years of higher dividends, isn't that just amazing? How many things in life are that consistent? Other than the sun rising and setting, not much. This stock has the longest dividend growth track record in the world. It truly is a marvel. This increase is right in line with their 10-year dividend growth rate of 9.7%. And that growth is really quite necessary when you see that the stock yields only 1.6%. But with the payout ratio at right around 60%, investors should continue to expect this dividend to grow for many years to come, just like they should expect the sun to continue rising and setting every day. This stock isn't cheap, but why should it be? If this stock were cheap, I'd be wondering why. Look, you don't get a diamond for the price of a cubic zirconia, and this is a diamond of a business. Most basic valuation metrics are slightly elevated relative to their own recent respective historical averages, including the price-earnings ratio, which is at nearly 36. But if there were a business worth paying up for, it's this one. The second dividend increase I want to tell you about came from Norfolk Southern Corp., stock ticker NSC. Norfolk Southern just increased their dividend by 10.1%. Love it, love it, love it. How can you not love waking up to 10.1% more passive income than you had the day before for doing nothing other than simply holding stock? That's the easiest pay raise you'll ever get. I can promise you that. This is the 5th consecutive year of dividend increases for the railroad. If you thought a 10.1% dividend increase was cool, check this out. This is the second time this year that they've increased their dividend. If we compare the dividend today to what it was at the end of last year, the dividend is up a total of 16% this year. That's running well ahead of their 10-year dividend growth rate of 9.8%. The stock also yields a market-beating 1.7% to go along with this huge growth, and the dividend remains very well protected by a payout ratio of 40.4%. This stock isn't cheap, but a nice little pullback could be a great opportunity to get into this wonderful business. The price-earnings ratio of nearly 24 leaves something to be desired when compared against the 5-year average price-earnings ratio of 19.2. Still, Norfolk Southern, like most businesses, is just now recovering and bouncing back from a terrible 2020. So the future is very bright. If this name pulls back even a little bit, that could be your opportunity to get into a stock that's up nearly 200% over the last 5 years. Last but not least, let's talk talk about the dividend increase that came in from Hershey Co. stock ticker HSY. Hershey just increased their dividend by 12.1%. That's about as sweet as one of their candy bars, maybe even sweeter. Halloween is coming up in a couple months, but there's no tricks here with Hershey, only treats, dividend treats. The candy and snack company has increased its dividend for 13 consecutive years. This recent dividend increase was even nicer than it usually is. Their 10-year dividend growth rate is 9.2%. Now, that's quite strong, but 12% is even better. And with a payout ratio of 52.4%, the dividend is in a great position to continue flowing and growing for years to come. Also, the stock yields a very respectable 2%. That's not far off from the stock's 5-year average yield, and it certainly beats the market. This stock actually looks reasonably valued. Is it super cheap? No, but the valuation is quite acceptable. Most basic valuation metrics are pretty close to their respective recent historical averages. The price-to-earnings ratio, for example, is slightly under 26 right now. That might look high until you see that their 5-year average price-to-earnings ratio is 26.7. This is a stock that typically commands a premium earnings multiple, and why wouldn't it? It's a world-class business with some of the best brands out there. Even after an 18% year-to-date run-up, the stock could have a lot more sugar in it. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend increases. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including a link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.